So welcome everyone to our next session of NEDTech. We've got a really interesting discussion for you today, looking at crypto algorithmic trading with Erin Grover and Arthur Stock. But, welcome guys. But I'm also really thrilled because it's that day in the month when we have Toby Lewis from Novum Insights telling us the latest that the data is telling us about what's going on around the world. So Toby, welcome.
Well, thanks very much for having me, Jane.
So Toby, it's been an interesting month for DeFi, among other things. We'd love to get your updates.
I think the DeFi market itself has been again a roller coaster ride, and there's been a lot of, I guess, general. It was a big declining part of the market that I think was inevitable after some of the drama around the likes of Sushi Swap and this kind of thing. There's been a general decline in that part of the market, and I think that's just a natural shaking out. But I think that now it's starting to rally a bit, and I think that more and more market participants are getting their head around what makes sense in those kind of markets, and since then it's stabilized quite a bit. So I think it's been really exciting. Ahead of this panel, we were putting together some information on the wider crypto fund space. There's been roughly 300 crypto funds formed over the last few years. Their sort of return trends are pretty interesting, right? This is kind of like a firefly space. So the many crypto funds sort of pop up and go out of business, but they can have astonishing returns. Really pleased to be on this panel today with one of like the new breed of crypto funds as that space is institutionalizing, Iconic. But I think that there's been the space generally is solidifying. So we've been tracking the industry since about 2016. When we were around, a lot of those hedge funds, crypto funds that were starting had $2 to $4 million of assets under management, or even less. So they were not very, very sort of cottage style operations. And what you're beginning to see is groups that have had consistent returns, like Iconic that we've had on here, can get sort of are beginning to amass significant assets under management. So you're seeing a gradual institutionalization of groups, with some with 10 million under management, some with 50 million under management, which then starts to become a very sort of mini alternative space. Also, groups in the space are generally able, because they're providing access to pretty eye-popping returns sometimes in even like the 100%, 200% plus annual returns, which is, for anyone who's participated in traditional markets, that can be quite eye-popping, and it's quite hard to get those kind of returns in doing any strategy in the traditional space. So people are drawn to this area, and I'm really looking forward to the discussion with Iconic and the wider debate on where crypto funds are, where they can go, and happy to chip in any way.
Yeah, thanks, Toby. And I hope that you'll be able to stay for the panel, because you might have some interesting insights into some of the questions.
Most definitely.
Fantastic. So let me turn to our two great speakers for today. Erin, can I just get you to introduce yourself and give a little bit of your background, and then Arthur will come to you.
Sure. Thank you, Jane. Really happy to be here with all of you. So I had a background in international development. I worked for the UN and organizations like USAID and Mercy Corps for most of my 20s in Asia. And then switched into working in film in Los Angeles and then digital marketing, which is kind of the foundation of what I did for that decade. But then I fell into crypto. And 4 years ago, I started by supporting clients with about $500,000 worth of crypto, which is small, but for a first time person doing this, it was a big deal. And it was a good testing ground. And I literally fell into it and then went into trading algos and starting my own crypto trading, algo trading fund in Ireland about 3 years ago. So I've been here from the start of the crypto algo trading space. I've seen it evolve a lot, and now I'm working with Coinic, and I'm very happy, grateful and honored to be working with them because they're doing it right, and they're exactly what I feel is kind of like the thesis of the work that I've been doing, you know, focusing on the the gains, but also on best practices, compliance, regulatory standards. So.
Yeah, thank you and welcome, Arthur. Please give us a little bit of your background.
Hi Jane, thank you for having me. Well, my name is Arthur Stoke. In Dutch we say Stolk, but it's really hard to pronounce in English. So yeah, my background, I studied business IT, or we call it information engineering. I did also study in small business, and then in the end of 2016, I started Iconic. Well, it was just an idea on paper. I gathered some capital from friends and family and invested that in Bitcoin and Ethereum. And everybody knows what happened after that. The big boom came and we made a good chunk of money. I went to my buddy Egbert. He's also a partner in the business. He worked at a big financial institution here in the Netherlands. And he said, well, if we're going to do this, we're going to do this at the right way. So this is how we started. So we applied for registration as a Dutch financial regulator. We got that. So that was pretty awesome. Also, we got a Dutch bank account. It's really hard to get because we do crypto. Well, we have now been also fully audited, so we're really proud of that also. Fast forward into time, we're now in 2020. We did a great return year to date. I didn't have the last figure, but it's around 100% plus, like Toby already mentioned. Well, but this is extreme, of course, but to put it in perspective, 2018, when the markets went down, we did 11% plus. Last year, we did 25% plus, and this year is just exceptional. And we will keep our pace. Well, I hope that we will keep our pace. We are on top of our game. We just merged with Cyber Capital. That was one of the largest funds here in the Netherlands, crypto funds. So we joined forces, and now we are the biggest in the Netherlands. We have a big AUM also, and yeah, we're really proud of that. We're now expanding the team to roughly 12 people. And yeah, I think 2021 will give us a really good year also in crypto.
Can I just add that?
Yes.
I think it's really cool that we're sitting here at the Amsterdam Stock Exchange, which is the oldest exchange in the world. This is what the background is. We're actually here. It's not a Zoom background. And I think it's very symbolic that here we are trading crypto inside quite an institution.
Yeah, no, and congratulations, because obviously that's quite an achievement. But it's a successful trajectory, but quite a short trajectory. And obviously crypto trading funds are relatively young, and it's a matter of speculation what the future is going to be. So I'd love you to just talk a little bit about what's the state of high frequency trading, and is the industry still mostly focused on crypto exchange arbitrage, or is it evolving in its strategy? What's going on?
Well, the state of crypto trading, high frequency trading, I think, well, it's not about the strategy completely, because a lot of strategies are out in the open now on the internet, so you can copy it really easily. But it's the tweaking of that strategy to make it your own. I think that's the first part. The second part is technology, so hardware. What kind of lines do you use to the exchanges? Are you the fastest? Because it's now becoming more and more of a speed game. The big liquidity providers or market makers, as they're called, are already in this game. And we can see that already on several exchanges. So the spreads are really tight. And I think that's the best thing to see in the markets, that they are there. Well, if you look at us specifically, we're developing almost 24/7 a day right now with multiple developers. So we have quants in-house and mathematicians. I don't know if that's a word in English, but we have those kind of people. And we're always on top. We have our own indicators that we have created and that we have put strategies around it. Arbitrage, yes, we do that also, but that's a little bit difficult because of the blockchain time. Because if you do a transfer, it costs a good amount of time before you are from one exchange to the other exchange. So you need to have positions on all exchanges to do good arbitrage. So that's a little bit difficult. But there are other types of arbitrage, like, for example, triangle arbitrage. I don't know if you heard that, Jane, but that's also one of the strategies that we also use. So there are multiple strategies right now deployed, and how our algo does that, it recognizes market conditions. And regarding the market conditions, it's applied the strategy that we have developed on that particular condition.
I just thought, for the benefits of some of our listeners who are not really experienced in this, if you could just briefly define what triangle arbitrage is, I think that would be helpful.
Yeah, there could be a price difference between Ethereum, Bitcoin, Euro, Ethereum. And that small difference we can arbitrage out. So that's the triangle. And it could be on any pair. So if that's on an exchange, and we see that because we do a fair price calculation, because we gather data from all exchanges around the world, tick by tick, we do a fair price calculation. And the fair price calculation shoots out the price that we think is the fair price of that particular asset. We shoot it to the exchanges, and if there's an arbitrage opportunity, we arbitrage that out.
Yeah, I'd like to add to that, because I have surveyed many funds around the world over the past couple of years. And in the beginning, I would hear people in the startup world of crypto quant funds saying, "Oh, I'm doing this arbitrage thing, and I'm probably one of the only ones." And I, it was kind of one of the biggest oversights that I saw in these companies, because everybody thought that they had something special, but really everybody was trying to do it. So, so I kind of like what Arthur's saying about, really it's about how you're tweaking your strategy using things that everybody else is using, and the speed.
Thanks, Erin. Let me stay with you, because I know that you've always been really focused on compliance and appropriate regulatory practice. And obviously you guys, this is something that you've started with and have continued with, but how are you seeing this across the industry?
I don't see enough companies prioritizing the standards of traditional investment funds. I don't see, there are many funds that don't have compliance officers. There are many funds that don't do third-party auditing. They talk about it, they say they want to do it, but they don't get to it. And it's shocking and scary. I would say that it's a minority of the funds that actually have like the full regulatory practices. It's a very small amount. So it's not good for those business owners who don't care about it, though, because regulation is coming. And luckily, you know, for example, Arthur's doing a great job with these standards. You know, iCoinEck has in-house compliance and third-party auditing. He'll be prepared for regulation. Many other funds won't be, unfortunately.
So Arthur, tell us a little bit about what you're doing in iCoinEck, just in terms of compliance and regulation and so forth.
Well, I think the most important part is that we report on a yearly basis to the Dutch Central Bank about how many assets we manage and in which markets we do that. And regarding compliance, Well, I don't think it's really client friendly, but we need to do it. We do the best practices from the traditional finance and apply that to the crypto finance. So we do a full background check on all our clients and there's software for it. So full KYC, and we have an AML policy, anti-money laundering policy. So we ask you for proof of residency. We ask you for proof of an ID, so that we know that you're the real deal what we are talking with. And if you deposit more than 100K with us, we need a source of wealth also, and that needs to be checked by a notary or an accountant, or that we can make sure it's a legalized document. That's what we need, and we get it from all the people. So and everybody understands it also that are getting involved with us.
And do you think that this is increasingly a trend that you're seeing in Europe in relation to crypto, that people are moving to a far more regulatory compliant approach?
Well, regarding Europe, it's hard to tell for me because our focus is now on the Netherlands. But for the Netherlands, I can tell you this: I think the Netherlands is one of the countries that has full regulation for crypto, not for crypto funds, but for crypto brokers and exchanges and custodians. One of those parties is Amdax. They just onboarded with the Dutch Central Bank. They got a license, so they can change fiat for crypto and they can store crypto. And the Netherlands is one of the toughest countries right now to get any permit to do so. So yeah, I think here in the Netherlands, it's everybody wants to do it good and by book. And I think that gives maturity to the markets, and I hope also some comfort to potential investors that they can enter the crypto markets in a safe way, but then they can do it through the Netherlands.
Let me come back to you, Arthur. I don't know much about crypto. I want to invest in the space.
Yeah.
What should I be doing in terms of due diligence of a fund? How do I find a fund that is going to be relatively safe for me?
Well, yeah, of course I'm going to sell my own fund, but I think this question is better for Erin because she did her due diligence on us.
Yeah.
So I think she can tell this much better.
Yeah, I conduct due diligence on the people that I work with too, just to do the best that I can do, period. And Arthur does the same. So, I mean, first of all, there are basics that you can start with, like looking for the website, looking at the LinkedIn to see all the names. If you go to a website and you don't see a team, start to wonder. Looking up the company registry for the fund in the country that it's located in. Asking for NAV reports. If a fund does not have a NAV report, do not touch it. Rule number 1, that's pretty easy. And for me, I need to work with funds that have been trading for at least a year. I will not touch any fund in this space that is under a year. And I think everybody should follow that rule. Also, just being able to see the month-to-month reports for the amount of time that the fund has been around. You can if you can contact people at the fund and get on a call with them, talk to their compliance officer. You make sure that the fund has a compliance officer. If a fund does not have a compliance officer, do not touch it. The third-party auditing is incredibly important as well. That's something that is a must. It should be a must for anyone. And yeah, I mean, I think that pretty much kind of covers my basics.
I think returns are also important.
Well, yeah, we want to make money too. That would be cool. Yeah, so it's equally that, and yeah.
No, thanks, Erin. In fact, when I write up the blog from this, I think I'm going to have Erin's top tips for doing due diligence on funds. So that was really helpful. So, what are the biggest hurdles to these kinds of funds at the moment, both at an industry level and as an owner of a business?
As a firm or as a fund, there aren't that much hurdles, but to bring it down to the whole group and the company, the biggest hurdle still is paying people. We have money, we can exchange it for crypto to fiat, but then getting the fiat back is still difficult. We have a solution for that, but we can only do euros, for example. We tried to pay a business partner of us in dollars. It was just declined by the bank. They said, no foreign currencies anymore. You just do euro. That's what we accept from you guys. So those are the biggest hurdles still. Although we do everything by the book, we have everything in place, this is still a thing going on. And I think we're not the only ones. There are a lot of crypto companies surrounding us that have exactly the same problem. So the biggest hurdle right now is transferring fiat money. That's the biggest hurdle still.
Yeah, I'd like to speak a little bit on that because I've seen so many of these funds go through their own challenges. Back in the earlier days, and I think it's still somewhat true, but Arthur, with APIs are still crashing, right?
Yeah.
Why don't you talk about that?
Yeah, that's also a big thing. So the exchanges, a lot of exchanges aren't ready yet for big loads, so for big volumes. So if you see Bitcoin going up really high, fast, or going down really fast, exchanges, APIs will just give up on you. So that's also still a problem in the industry, and they're working really hard to fix that. But I think we're techies, and the techies have really good systems to fire at those APIs and to overload them in such extent that they're just giving errors back. Yeah, so that's also still a major issue in the industry.
Yeah, and I want to speak to two other points that I see a lot of first-time fund owners go through, and I this is not for everybody, honestly. Like, just because you have a good idea and you know how to do like the right coding, you develop in Python, doesn't mean that you should be doing this. No. Because what I've learned and what I've seen is that you can get a genius developer making these trading algos, but because they haven't had the like 10 plus years of experience that traditional quant fund developers have when they go on the job in the traditional markets, being a newbie is a challenge, because all of a sudden you can have all this volatility or this thing or that thing happen, all these unexpected pitfalls, and not know how to deal with them, and all of a sudden you're losing a bunch of money for the fund. So, you know, that's another thing too that feeds into what should investors be looking for. Only go with funds where you have seasoned developers who have done quantitative trading before, with years of experience, not just 6 months or 2 years. Years of experience. The other challenge is the expense of preparing for regulation. I mean, not only do you have to, you know, pay for the team, like the compliance officer, and pay for the third-party auditing. Getting crypto funds audited right now is really expensive. No one really wants to touch it. And then you know, in Europe anyway, the regulatory body for financial trade instruments is called MiFID. We now have MiFID 2. And when MiFID 3 comes out, who knows, maybe 4 or 5 years from now, I don't really know, it will definitely include crypto. And for a fund to actually go through the MiFID process can be at least €1 million plus. And there's no guarantee of getting approved. So you really need to have solid backing going into this. And it's not the kind of startup where you go and chase down funding and wait 6 months, because you don't have the time. You have to keep on the ball the whole time, or else you can totally blow up your fund in a bad way.
Yeah, thank you for that. So is it fair for me to take from what you're saying is that you're just seeing the kind of institutionalization of these crypto funds, and I mean more mirroring the traditional funds but just using the different assets?
Yes, of course, because if you want to be a serious player in this field, you need to. It's just as easy as that, because the traditional finance is also looking at crypto. We see more and more news coming out that they're doing it or buying it already, and if you also want to have them on board, maybe as a client, you need to have the practices as they have, because otherwise they won't look at you even. So it's a necessity to have all these checks in place.
Yeah, thank you. So where do you see this all going? Because, you know, obviously this is a new space. It's had its ups and downs, and we have our rogue players. Where do you think this is going over the next 3 to 5 years?
Yeah, well, we think that it will be described as a new asset class, but it's just waiting for regulation regarding that. The European Union is already, or Parliament is already yeah, going up front of that. So they just released, or at least it leaked, a document, and it's called MiCA, Markets in Crypto Assets. And that's pretty tough. They describing stable coins and how to do it, how to operate stable coins, and you need to have capital behind it, for example, and it needs to be audited, and you need to have proof. So it could be hard for USDT to be traded over here in the future. Another thing is that ICOs are 20 pages in that in the document. If you release a white paper, what needs to be in that white paper, what kind of capital can you attract, what you need to do is everything is there. There will be rules regarding crypto, so it's getting more and more into. I think it will be a law eventually. So, and if it's a law, then you can define it, and then you can define it as a financial instrument, and then it can be another asset class, just like we have with other asset classes.
Yeah, with funds, I mean, I definitely see, you know, more funds will fall apart, and the ones with the best strategies will stick around, just like we saw in COVID this year. A lot of funds had to shut down in March and April because their strategies couldn't handle the volatility. But as the market evolves, hopefully, you know, we won't ever encounter anything like this again. You know, the market with more institutional players coming in on bigger levels will also change things for the smaller funds. You know, I don't see all of them being able to keep up with it.
Yeah, thanks, Toby. I just wanted to invite you perhaps to make a comment, because you have a really big picture view of what's going on in the market.
Yeah, and I think it's really interesting, and it's great that to be joined here by like a fund out of the Amsterdam Stock Exchange, which I think is a nice sort of stamp of where they're looking to go with their business. I think that it's always super exciting in any market where the entire sort of where new things are being built and new rules are being formed. So you started this chat talking about DeFi. It's a space that really came onto the map this year. So sort of with more than $10 billion locked into that market of people sort of playing around with assets, looking for a yield. Before this year, that market was sub 1 billion. Probably a lot of market participants had only heard of a handful of projects in it, like MakerDAO, for instance. And gradually that market has sort of, it's been evolving like many crypto markets. And then what the industry players, the hedge funds, what they're looking to do is sort of put in place interesting strategies from traditional markets, but almost what's more exciting is with the sort of new tech that's being built to trade these markets. I think new things are being created as well, right? So the liquidity provision that you're seeing in DeFi, a lot of the sort of there's new bags of tricks that are being sort of made available to traders, and that's available to sophisticated traders like Arthur and team, or available to just a man with a laptop or a woman with a laptop, Jane, and you can. I think there's a very interesting period coming, and what would be really nice as well is if we can see, like I'd say this year so far, like you started about DeFi has been characterized by a lot of financial engineering. So I see DeFi as very much in the vein of creating new ways of gamifying things. And where I'd say it is slightly worrying is that essentially a lot of things that are being built are just sort of almost sort of in jokes or things that are designed to, as they say in crypto, pump and dump and that kind of thing. And I think that a lot of people are attracted to crypto and blockchain and are really the true believers really want like really cool tech being developed that isn't just more like to multiply things and but to actually get something tangible done in the real world using interesting solutions that people can build upon. And I think the good thing is the long-term players, the institutional players like Iconic and others, are going to kind of generally a lot of assets might get played around with, but people are wanting to trade high quality assets. Like if you're an institutional fund like Iconic, you need to report some of the assets that you're holding. So you can't just go into any old thing. So I think what we'll then see is how the new building blocks of crypto and those kind of things are laid. And from there, I think things are going to get very exciting.
Thanks, Toby. Arthur, let me come back to you. What do you think are the most important points that traditional investors and institutions need to understand about crypto funds?
Well, I think the most important thing for them to know is that they need to know it's a 24/7 market. It never closes. And that's something new also for them. Because we have the futures that we can trade and you can always, but this market, spot markets are always open. We don't go on holiday. Of course we do sometimes, but the markets don't do. And I think that's the most important thing. So there's always an opportunity, and that's something new that we never encountered before. And that's something that it's completely new to them. And also the tech aspect of it, that it's easy to enter these markets, and it's also easy to exit the markets. And they still think it's really difficult to exchange your crypto for euro or vice versa to fiat, but it's also pretty easy nowadays. So those are the things that are really important for them.
And Erin, if you're a new investor who's interested in maybe putting some money into a crypto fund, what advice would you give?
Well, the number one advice that we're all supposed to say as advisors is don't put everything you own into a fund. Make sure it's money that you can lose. No life savings, and it's a very volatile and high risk investment. That said, there's so much going on right now, and it's a great time to invest. So I believe we're still in the early days of crypto and the early value of Bitcoin, for example. So if you do have the money to play with, now is a great time. I think looking back, if you go ahead 10, 20 years from now, you'll be pretty happy that you got into it and held on to it.
Erin, and I'm going to direct this question to you because this is something that, I know that you think about. So one of the things that we've been doing recently is we've actually started a digital ethics series, and what you were just talking about kind of speaks to consumer protection. And I think during the pandemic, a lot of people are struggling and will struggle some more. They've lost their jobs and life is tough, and maybe they'll be a little bit more tempted to put their life savings into something like this. So just from a perspective of kind of thinking about ethics and crypto trading, I just wonder if you've got any observations or comments to make, because I think there is an element of exponential risk in terms of ethics and crypto, because the decisions that you make can be magnified, many-fold.
Yeah, you want to go?
Yeah, I think that what Erin just described, I think we do that also at Iconic. If you enter the fund, you need to fill in a form, and that's where you declare your net worth. And what you declare there, we do an ability to bear loss assessment. So, well, 9 out of 10 investors, that's not a problem, but sometimes you're one in particular in between, and then you say, hey, we see something strange here. Can you tell a little bit more, or can you elaborate a little bit more about your financial situation? And then they do. And to be honest, in the beginning, we declined 3 potential investors because they only owned 200K and they wanted to put 100K in the fund. That's not an acceptable risk for us because we want to have happy clients.
Yeah.
And of course, if they did it, yes, they would have a nice return, but it was too high of a risk also for us as a fund, but I think more for them to do this. So yeah, we do this kind of assessments, and I think that's really good because you want to build a relationship with people and don't get greedy. That's the bottom line.
Well, and one thing I say to people who don't have large amounts to invest, the cool thing about right now is that if you have, you know, an extra $50 or $100 or euros that you can spend, like talking on a very small amount, that, and you know, you can do research on your own. There's so many resources online to look into the altcoins, and like so many altcoins within, you know, the top 10, 20 slots of the, you know, coinmarketcap.com or index for the industry. So many of these coins are under $1 or under 50 cents, you know, 25 cents, pennies. And, you know, yeah, a lot of them won't succeed and go big, but, you know, a lot of the people who did well with Bitcoin got in early and paid like pennies per coin. So, you know, you could take a risk, and I know people who will, you can do on certain exchanges, you can do like an auto pay like once a week or once a month and just set up a $10 payment into any coin of your choice, pretty much like Bitcoin, for example, or Ethereum, and just let your bank card take out $10 a month and not look at it. But, you know, people can do that. So that's, you know, that's the nice thing about this market, is that you can put tiny pieces in, and maybe one day it will go somewhere.
And I want to add, this is not a financial advice. Please do your own research.
Sure.
Yeah, and to the point on that is like I think it is a great way to tinker with crypto as well. Like just download a wallet of some kind. Like the popular one right now is MetaMask, where like your typical like day crypto enthusiast. And it's quite fun just to play around with and fire things around, and you sort of it's kind of almost magical, the tools that are being built in different areas of crypto. But yeah, like especially like Arthur says, firstly, for all these altcoins, typically you're trading using Ethereum, which then you're using gas, which can really erode returns as well, but they're so volatile that you can make a return doing that. But it's also it's that like you could make a $200 trade and get hit for $20 in gas fees at some points when the market gets very high. So it's very, but that can be wiped out because the market goes up. That particular coin goes up 5x, but many times it won't. So statistically, it's quite a high risk activity, I'd say.
So Toby, just for people who might not understand about gas fees, can you just give us a quick explanation of that?
Yeah, so Ethereum, which is the main protocol sort of used by developers. I guess it's kind of like the developer coin. Every single transaction moving Ethereum around has gas fees paid for the network for the fee, and you can speed up your transaction by paying a slightly higher fee, it's just historically. But the major problem with it is the gas varies. The major problem for the user, I guess, it's not necessarily a problem for the Ethereum Foundation, but you are paying a gas fee to the miners of Ethereum, and the effectively that helps run the transaction. So there's all these computers around the world powering the Ethereum network. So it's this great computer network in the sky. Endlessly creative things are being built, and it allows all the smart contracts and logical money and all of this. So gas is in many ways a wonderful thing, but the major problem is the moment what we saw at like the height of the Uniswap sushi craze like 2 months ago, where these decentralized exchanges, where Uniswap at one point was using 30% of the entire Ethereum network, people passing out coins back and forth and doing liquidity mining on it. And so it's something, it's kind of one of the biggest problems, gas consumption in the crypto markets. And so a lot of the developer community are talking about creating an Ethereum killer and looking at new protocols to be built. And there's any number of them that are being built. And a good trading strategy for people is to look into what the ones actually that might be successful, and they typically will build a layer, or one trading strategy, I should say. And so that's a broad summary on Ethereum, and then where Ethereum and gas, and where that's ending up going with the market. The gas fees got very, very high when Uniswap was around. CryptoKitties famously crashed the network 3 years ago, because people were trading these non-fungible tokens, these basically little kitties, a bit like a Tamagotchi, that they were sharing between each other. And even that managed to crash Ethereum because it became such a big craze.
You want to add to that? I wanted to add.
Yeah, good.
I just wanted to to take it back a tiny step to like the I know a number of people who wouldn't go into the depths of trading, going into tokens and Uniswap. That I think that's when you're a little bit more deep into crypto. But for people like my mom, who will never go to Uniswap, or my sister, you can actually go to Coinbase and just set up, like I was saying before, like a small purchase for like Bitcoin or Ethereum every month. That's tiny, and you could do it as little as $5 a month, stuff like that.
Yeah, thanks, Erin. We do have a question actually, and I'll give it to you to start at least. Someone's asked, where's the best place to go to learn about crypto in general and different coins in a structured way, making the point that there's a lot of information out there and it becomes a little overwhelming, and it's hard to know, where's the best place to get that information. So would you suggest Coinbase, or do you have some other suggestions for people who are new to crypto and want to learn?
I started out just binge watching on YouTube. What about you?
Yeah, wow. Well, how did it start? I think I read the white paper of Bitcoin. It's a little bit technical, but I think that's then you also understand blockchain technology. That's what powers this industry in the back. So yeah, it's I think if you just Google or YouTube what's blockchain, what's a cryptocurrency, I think you will get really good videos about that. And just watch the short videos.
Yeah,
so the 2 to 3 minute videos. It will give you a good insight about what's happening.
Yeah.
Toby, do you want to come in there?
Yeah, no, I definitely second Arthur that anyone should read the Bitcoin white paper or have a look at it. It might be unintelligible in parts, but it's still a great document, and it's got some great things written in it. I think that Don Tapscott's book, Blockchain Revolution, and his TED Talk are quite good sort of early primers. and there are any number of really, really good people. There's a lot of good people like you can follow on Twitter or social media and that kind of thing. And from the depths of sort of strange DeFi people, so you get to know the personalities of, I don't know, Andre Cronje, who came up with YFI, or Sang Bateman-Fried, who's the FTX founder, and all of these people. I don't know. Like, the problem is all of them come with strings attached. So it's kind of in crypto they have a phrase which is on the internet, DYOR, do your own research. It's kind of like I'd say that a lot of these players are non-objective. Then you've got like the news sources, Cointelegraph, CoinDesk, whatever. There's just a general meetups, trusted people. I think it's a very sharing and giving community in some ways, although you've got to be very careful with who you're interacting with as well. So just make sure, just do a smell test, and if you wouldn't trust to buy a car from that person, don't trust them. That's what I'd say.
Thank you, Toby. We're coming to the end of the session. Erin and Arthur, let me invite you to make a kind of closing summative remark.
Yeah. Well, we don't buy Bitcoin. We sell fiat currency.
Thank you. All right, so Toby, Lewis, it's always wonderful to get your insights. We really appreciate it. Erin Grover and Arthur Stock in Amsterdam Stock Exchange, congratulations for where you've taken Icoinic to date, and we really look forward to following your progress with great interest. Thank you so much for sharing with us today on NEDTech.